Welcome to the Global Board Institute's Super Forecaster Geopolitical Crisis Briefing for the week of March 19, 2026, for chairs, board directors, and C-suite leaders. This briefing is classified board confidential and is intended exclusively for members of GBI's Global Chairs and Board Directors Network, made of chairpersons, board directors, C-suite leaders, and senior governance professionals. If you are not a member yet, scan the QR code on the bottom right and apply to join this fastest-growing community of chairs and board directors. My name is Wasim Karkabi. I am the founder and chairman at the Global Board Institute and managing partner at Stanton Chase, and yes, this is my AI avatar. We will be presenting this week's board-level analytical briefing on the Israeli-Iranian war and its global implications. This is day 19 of active conflict, following the coordinated U.S.-Israeli strikes on Iran launched on February 28th. What we are witnessing is the most significant military escalation in the Middle East since 2003, with direct consequences for global energy markets, supply chains, and corporate governance worldwide. It is not investment, legal, political, military, or financial advice. Over to you, Steve. Let's begin.
Thank you, Wasim. Before we proceed, a brief but important disclaimer. This briefing is for informational purposes only. All documented facts presented today are sourced and cited from credible outlets. Where we move into analytical inference or probabilistic forecasting, that is clearly labeled throughout. Our super forecasting probabilities represent best estimates as of this morning, March 19th, and are subject to rapid change given the volatility of the situation. This briefing does not constitute legal, financial, or investment advice. We encourage all board members to consult their own professional advisors when making governance decisions based on the intelligence presented here. This presentation is intended for members of the Global Chairs and Board Directors Network exclusively. Sharing this video or contents of this briefing outside GBI's Global Chairs and Board Directors Network without written permission is not allowed, and can result in the termination of your membership, followed by legal action. Now that we have legal and compliance disclaimers out of the way, let's dive in. Let me walk you through our methodology and sources so you understand the rigor behind this briefing. We employ a super forecasting framework that combines 4 core disciplines: base rate analysis, trajectory extrapolation, scenario modeling, and Bayesian probability updating, all AI-assisted. Every probability you see in this briefing is the result of that structured analytical process, and every number will be updated weekly as conditions evolve. Our primary sources include the world's leading think tanks and research institutions, from CSIS and RAND to the Bulletin of Atomic Scientists and the IAEA. For real-time developments, we draw from a broad spectrum of international news sources, including Al Jazeera, Reuters, Bloomberg, the Wall Street Journal, and regional outlets like Arab News and The National. For governance frameworks, we reference Harvard Law's Corporate Governance Forum, the World Economic Forum's Global Risks Report for 2026, and established standards like ISO 31000 for risk management. This is not opinion. This is structured analysis built on verifiable data. My name is Steve, and yes, I am an AI avatar. Let's begin with the executive summary. 5 critical headlines that every board member needs to understand this morning. First, active war. The United States and Israel launched coordinated strikes on Iran on February 28th. Supreme Leader Khamenei was killed in that initial operation. We are now on day 19 of active conflict with no ceasefire in sight. Second, this is a multi-front war. We are seeing simultaneous escalation across Iran itself. Lebanon, where Hezbollah has re-entered the fight, Iraq, where Iranian-backed militias are attacking US bases, and for the first time in history, all 6 GCC states are under direct Iranian missile and drone attack. Third, energy crisis. The Strait of Hormuz, through which 20% of the world's oil transits, has seen traffic drop by 80%. Brent crude is trading between $100 and $126 a barrel. Global supply chains are severely disrupted. Fourth, nuclear risk. Iran is now at less than 1 week from nuclear breakout capability. The new hardline leadership under Mojtaba Khamenei, the former supreme leader's son, is IRGC aligned and may accelerate weaponization. The decentralized command structure of the IRGC creates additional escalation risk that is difficult to predict or contain. Fifth, and most directly relevant to this audience, board action is required now. Geopolitical risk now demands the same governance rigor as financial risk and cyber risk. Boards must activate crisis management frameworks, engage in scenario planning, and build supply chain resilience protocols immediately. Let me now give you the operational picture across all 5 active fronts. The numbers at the top tell the story of scale. Over 7,000 US strikes have hit targets inside Iran. Iran has fired more than 3,000 projectiles, a mix of ballistic missiles, cruise missiles, and drones, at targets across the Gulf. Estimated Iranian deaths exceed 5,300. And Strait of Hormuz traffic is down 80% from pre-war levels. On the Iran front itself, US and Israeli forces have struck more than 7,000 targets. The most consequential was the elimination of Supreme Leader Khamenei. His son, Mojtaba Khamenei, has been named successor, and he is closely aligned with IRGC hardliners, not the reformist diplomatic wing. In Lebanon, Hezbollah launched over 200 missiles into Israel on March 2nd. Israel has responded with ground operations in southern Lebanon. Over 886 people have been killed and 1 million displaced. In Gaza, the Phase 2 ceasefire remains fragile at best. 611 people have been killed since the October 2025 ceasefire was reached. Humanitarian aid delivery is running at just 24% of agreed levels. Across the GCC, and this is historically unprecedented, all 6 member states, Saudi Arabia, the UAE, Qatar, Bahrain, Kuwait, and Oman, are under direct Iranian fire. Over 3,000 projectiles have been launched at GCC targets. Qatar's Ras Laffan gas facility was struck on March 18th. At least 11 people have been killed. And in Iraq, Iranian-backed militias are conducting relentless drone attacks on US military bases, with 50 attacks recorded in a single weekend. Now let's move to what boards really need: forward-looking scenario analysis. We model 4 scenarios with associated probabilities. These are not predictions. They are structured assessments of the most likely pathways, and they will be updated every week. Our base case, at 45% probability, is an attritional stalemate leading to a ceasefire. Iran's munitions are depleting rapidly. We've seen a 90% decline in missile strikes and an 83% decline in drone strikes compared to the first week. US domestic pressure on costs will mount. We anticipate Oman-mediated indirect talks resuming by May or June, with a ceasefire most likely in the third quarter of 2026. Oil would return to the $85 to $95 range. But critically, this would be a frozen conflict, not a peace. The nuclear issue would remain unresolved. Our escalation scenario, at 30%, is the one that should most concern this audience. In this scenario, IRGC autonomous cells operating under the decentralized Mosaic defense doctrine escalate beyond political intent. Iran crosses the nuclear threshold. The Strait of Hormuz is fully closed. Oil exceeds $150. Houthis resume Red Sea attacks. Turkey enters the picture. A global recession is triggered. Resolution would take 12 to 18 months or longer and would require great power intervention. Regime change, at 15%, sees Mojtaba Khamenei failing to consolidate power. The IRGC fragments. Domestic unrest compounds with economic collapse and war fatigue. Short-term chaos, but a potential long-term realignment opportunity. And the wildcard scenario at 10%, simultaneous Hormuz closure, Houthi Red Sea resumption, full Lebanon war, and Iraqi militia targeting of GCC oil infrastructure. A systemic energy crisis exceeding the 1973 precedent. This slide addresses the 2 time horizons that matter for governance: the ceasefire horizon and the lasting peace horizon. On the left, the ceasefire probability window. Right now, through April, we assign only a 5% probability of ceasefire. We are still in peak military operations. Iran's munitions are depleting but not yet exhausted, and diplomatic back channels through Oman are in their earlier stages. May through July sees the probability rise to 35% as attrition forces de-escalation and indirect talks resume, amplified by growing US domestic pressure over costs. August through December 2026 is our most likely ceasefire window at 45%. By then, Iran will be functionally exhausted militarily, and US midterm election pressure will create political incentives for resolution. Beyond 2027, at 15%, we're looking at extended conflict driven by nuclear escalation or regime collapse scenarios. On the right, and this is the harder truth, lasting sustainable peace. The prerequisites are formidable. Palestinian statehood remains non-negotiable for the Arab world, with 99% of Saudis opposing normalization without it. An Iranian nuclear settlement is essential. Hezbollah must be disarmed or integrated. The GCC needs a security architecture independent of US bilateral relationships. And you need great power consensus among the US, China, Russia, and the EU. Our assessment, a 5 to 15-year horizon for a sustainable regional peace framework. There is no precedent for resolution within the current power dynamics. It requires generational leadership change in multiple nations. Now let's turn to what this means for business, starting with energy and supply chains. The headline numbers are stark. Brent crude is trading between $100 and $126 a barrel, up from roughly $75 pre-war. Hormuz traffic is down 80%. 20% of the world's oil supply is at risk. European gas prices have doubled. 3 critical choke points demand board attention. First, the Strait of Hormuz. Iran is operating a selective blockade, allowing what they call permission-based transits. Only 21 tankers have passed since the war began, compared to over 100 per day before. This alone disrupts the global energy system fundamentally. Second, Bab el-Mandeb, the southern gateway to the Red Sea. The Houthi pause currently holds, but analysts assess it is almost certain to resume if Gaza reignites. Remember, the Houthis conducted 178 ship attacks in 2023 and 2024. Third, the Suez Canal is operating but at reduced capacity. Egypt's revenue is declining. Maritime insurance premiums have risen 300%. The structural shift call-out at the bottom is critical for long-term planning. This energy crisis is likely structural, not temporary. Prices are unlikely to return to pre-conflict norms even after a ceasefire. Insurance baselines are permanently elevated. Boards should plan accordingly. Let me walk you through the business impact region by region. In the United States, the defense sector is surging, up 21% on the ETF. But the tech sector faces exposure through Israeli operations, and energy margins remain volatile. Most critically for governance, over 1,300 new sanctions designations create a significant board-level compliance burden. In Europe, gas prices have doubled in days. Defense spending acceleration is now mandatory, not optional. The manufacturing sector is under stress, trade routes through the Mediterranean are disrupted, and refugee and migration pressure is building. In the Asia-Pacific, China faces the highest strategic exposure. 50% of its crude comes from the Gulf. India's energy costs are spiking. ASEAN supply chains are strained, and Malacca alternative routing is creating congestion. Container shipping costs are up 40%. The GCC is experiencing the most direct impact. Saudi Vision 2030 has seen FDI decline by 60 to 70%. NEOM construction is suspended. The UAE is relatively stronger due to its diversified economy, but all 6 states are under direct military attack for the first time. Tourism has effectively collapsed. And in North Africa, Egypt's Suez Canal revenues are declining, Libya's oil production is vulnerable to spillover, and Tunisia and Morocco face trade disruption combined with food price inflation. Let's drill deeper into the GCC, because for many of our members, this is where the governance decisions are most acute. Saudi Arabia is rated critical. The Vision 2030 portfolio, representing $840 billion in planned investment, is threatened by a 60 to 70% FDI decline. NEOM construction has been suspended. The kingdom is under direct Iranian missile attack targeting its oil infrastructure. The UAE, rated high risk, is relatively stronger thanks to its diversified economy. Dubai's trade hub function is being maintained. The Abraham Accords are being kept deliberately low profile. But the numbers are sobering. Over 1,672 UAVs and 314 ballistic missiles have been directed at UAE targets. Qatar, also high risk, saw its Ras Laffan gas facility struck on March 18th, putting critical LNG infrastructure at risk. Qatar's mediator role remains valuable, and Al Jazeera's broadcasting influence gives it diplomatic weight. Kuwait, rated high, has its US military bases targeted. Its oil production is vulnerable and it has limited economic diversification. Bahrain is rated critical. The US Fifth Fleet headquarters has been targeted. It's a small economy, highly exposed, with its financial services sector disrupted. And Oman, rated medium, plays the most important diplomatic role as the Iran-US back-channel mediator. It's relatively less targeted, but its border along the Strait of Hormuz creates inherent exposure. This is the governance action slide, and I want to be direct. This is the most important slide in the briefing for every board member in this room. In the next 30 days, boards must take 5 immediate actions. Activate geopolitical risk as a standing board agenda item, not a one-off discussion. Convene an emergency risk committee session. Map your supply chain exposure to all 3 choke points: Hormuz, Bab el-Mandeb, and Suez. Review your sanctions compliance posture against over 1,300 new designations. And stress test your financial models at $130 or more per barrel of oil. In 60 days, the governance infrastructure must evolve. Establish a dedicated geopolitical risk committee, or at minimum expand the mandate of your existing risk committee. Implement a scenario-based strategic planning framework. Begin dual sourcing critical supply chains where possible. Review your insurance coverage for conflict and political risk. And update your crisis communication protocols for all stakeholder groups. In 90 to 180 days, boards must restructure governance for what we believe will be sustained geopolitical uncertainty. Build a board-level geopolitical literacy program. Integrate ESG considerations with your conflict zone positioning. Develop adaptive strategy frameworks that replace fixed long-term plans. And consider rebalancing your regional presence and investment portfolio. Beyond specific actions, the way boards lead must fundamentally change. Let me walk through 6 critical shifts in governance style. From predictive to adaptive. Traditional strategic planning assumes stable environments. That assumption is broken. Boards must shift from fixed 3 to 5-year plans to adaptive strategy frameworks with quarterly reassessment triggers. Build optionality into every major decision, from reactive to anticipatory. Boards that monitor KPIs after the fact will be blindsided by what comes next. Implement forward-looking geopolitical indicators, oil price thresholds at $80, $100, and $130, shipping indices, sanctions velocity, and defense spending trends. From neutral to positioned. Silence on geopolitical issues is no longer a neutral stance. It is a position. And stakeholders, employees, investors, customers, and regulators will interpret that silence. Boards must proactively define their ethical positioning on conflict zones, sanctions compliance, and ESG implications. From siloed to integrated, geopolitical risk intersects financial, operational, reputational, and legal risks simultaneously. Break down committee silos. Every board committee agenda should now include a geopolitical risk dimension. From confident to humble. No one predicted the February 28th strikes. Accept that radical uncertainty is the new operating environment. Build resilience over prediction. Maintain strong balance sheets, diversified supply chains, and organizational agility. And from distant to engaged. Quarterly board meetings are no longer sufficient cadence for this environment. Establish monthly geopolitical briefings. Create direct board-to-management dialogue on scenario planning. Consider retaining board-level intelligence advisors. This is your monitoring dashboard, and I need you to look at the right-hand column carefully. Every single indicator is in the red zone. Every one. Brent crude at $100 to $126. Hormuz transits down to approximately 21 ships per day from over 100. Over 1,300 new OFAC sanctions in the past month alone. Red Sea shipping effectively paused with the strong possibility of Houthi resumption. Iranian nuclear breakout at less than 1 week. GCC foreign direct investment declining 60 to 70%. The defense sector index up 21%. And container shipping costs up 40%. This is the most severe geopolitical risk environment since the 1973 oil crisis. The bottom line is this: boards operating without active geopolitical risk monitoring are exposing their organizations to unquantified but very real material fiduciary risk. This dashboard should be on every board's radar starting this month, updated in real time and triggering governance actions when thresholds are crossed. Here is our weekly forecast for the period March 19th through the 26th, presented with specific probability assignments. At 95% confidence, we forecast no ceasefire agreement this week. The conditions are simply not present. At 90%, oil prices will remain above $100 a barrel. The supply disruption is too severe for any meaningful correction. At 85%, Iranian missile and drone strikes will continue, but with declining volume and precision, consistent with the munition depletion trend we've been tracking. At 80%, Iraqi militia attacks on US bases will continue, maintaining pressure on the proxy front. At 75%, Israel will expand ground operations in southern Lebanon to address the Hezbollah threat vector. At 70%, Houthis will maintain their current pause on Red Sea attacks, but this is the most fragile of our forecasts. At 65%, Mujtaba Khamenei will make public moves to consolidate IRGC support, critical for the regime transition. At 60%, additional US military assets will be deployed to the region. At 55%, European leaders will issue a joint call for UN-mediated talks, though this will have limited practical impact. And at 50%, the IAEA will detect further Iranian nuclear enrichment activity, which would be the most escalatory development to watch. Our overall confidence level is moderate high, based on trajectory analysis, munition attrition rates, diplomatic back-channel activity, and historical conflict patterns. We will update all of these numbers next Thursday. Let me close with the most important message of this entire briefing. This is not a temporary disruption. The structural conditions that produced this conflict, unresolved Palestinian statehood, Iranian nuclear ambitions, great power competition between the US, China, and Russia, and global energy dependency on the Middle East, will persist well beyond any ceasefire. 3 imperatives for every board member watching this briefing. First, treat geopolitical risk with the same rigor as financial and cyber risk. It belongs on your board agenda permanently, not as a crisis response. Second, build resilience, not prediction. The world that emerges from this conflict will not look like the one before it. Your organizations must be built to adapt, not to forecast. And third, act now. The boards that respond within 30 days will be the ones that lead their industries through this period. Those that wait 180 days will be playing catch-up. This has been the Global Board Institute's Super Forecaster Geopolitical Crisis Briefing for the week of March 19th, 2026. We will be back next Thursday with updated forecasts, scenario probabilities, and governance recommendations. Thank you for your attention. Stay vigilant. Stay prepared.